Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning. Welcome to the podcast Become Sensible. My name is Fiona. We talk about practical finance, accounting, entrepreneurship, and tax tips so help you to manage your business situation. As you know, every 2 weeks we have a case study from our client. And today our case focused on the bookkeeping, finance, and tax confusion for a multiple member LLC, which is one of our clients. And so we also welcome my co-host onto the episode. We talk about more about this special case. Welcome on.
Thank you, Fiona. Hi, everyone. Welcome back to our bi-weekly case studies. And this week's case, I'll give us a rundown, but we're dealing with a creative agency that is a multiple member LLC. So they have two owners. They split it 50-50 and their revenue is around $350,000 a year.
Yeah.
And then after expenses, that leave them with $200,000 in profit. But they're running into some tax issues and some structural issues when it comes to their business. And they're thinking about changing to becoming an S Corp. And so does that sound like a smart move to you?
Okay, we can start here. One of the things that I also want to know that we make up these random numbers like $350,000 in revenue or profits because we want to wipe out our client information. So we just give you a general number so that easy for you to follow with the case.
Right. So, I mean, just to start off, I feel like for this specific client, they talked about having an issue with phantom income.
Yeah.
Do you want to just break down what that is for people who don't know?
Yeah. So phantom income, that is actually not like very regular word that we use in tax situation. So basically, it's just related to the fact that you get taxed on the net profits of the business, regardless whether you make the distribution out to the partner or not. For example, in this case, if they make the net profits is like $200,000, that is where they get taxed on, regardless whether they actually distributed like $100,000 for each of the partner or not. You still get taxed on that $200,000 in the profit. But the one thing that you will need to pay attention on when you become a multiple member partners, every time at the end of the year the partner file the tax return, they will issue a K1 and depends on the equity in the business in this business partnership agreement, like whether 50-50, like for example in this case 200,000, like each of them will get $100,000 K1, and that will be report on to your personal tax return from 1040, and that is where you pay tax regardless how much that you get distribution. But only have one special case is that there's a thing called guaranteed payment in partnership. If you don't have any, you partners, for example, if you partner with my business and you don't actually get any income from somewhere else, so you want to get a guaranteed payment from the business out to you, $50,000 per year, so that you can handle your personal finance situation, then that is called guarantee payment, and that guarantee payment will show up on your K1. But if there's no guarantee payment at all, then everything will be split 50-50, and that will be reported into your K1 to file the tax return on your personal return.
So in general, when it comes to people who are facing problems with phantom income, would you feel like an S corporation could be a solution for that?
So end of the day, business tax on the net profit, regardless how much is your revenue or how is your arrangement, it's all come down to the net profits from the business. And so normally a good standards to consider to become an S corporation is when your net profits from the business start from $50,000. If your net profits like start from $50,000, that is good standard, like a starting point to consider to switch become an S corporation. So in this case, if it's like $200,000 in net profit, that should be a very great point to like switch it to become an S corporation.
Okay, that makes sense. And then they also had a complaint about their self-employment tax as well. They were talking about how their percentage right now is 15.3%, and they feel like that's really high. Is that something that they should be addressing or something they should be worried about?
Yeah, because normally like you will need to pay the self-employment tax on the net income from the business. So in this case, if $100,000, you probably will pay the self-employment tax around like 15.3%. So become an S corporation that will make the partner become the employee of the company. And because of that, you can have a reasonable salaries to pay for each partner.
Right.
And the partnership can take the deduction of the salary that pay to each partner.
Okay.
Yeah. So that it will be the super helpful. Like for example, on that $200,000 of net profits, each partner will be report a K1 of like $100,000. But instead of like report of the K1 $100,000, you will report like for example, if you pay for each partner $50,000, make it even. Then the rest of it, the business will take the deduction of $100,000. Now the net profit from the business will become like $100,000. And each partner will report ordinary income as $50,000. So it's cut back for you 50% of your self-employment tax because you only is based on the W-2 earning that you issue from the business.
That makes sense. And then to set this up in terms of like after they move into S corporation, if they wanted to set it up like in payroll, are there like any specific steps that they should be looking at, or is just like normal setting up when it comes to like your self-employment income?
Yeah, so to become an S corporation, everyone needs to submit a form called 2553 to like select to be taxed as an S corporation, because S corporation is not a structure itself. It's just the way that you select to be treated as small business corporation under the IRS.
Okay.
And they have a tax code for it. But this is not a structure itself. So for multiple member LLC use Form 2553 to become taxed as an S corporation. And once the IRS send you a letter, and this is very important, that you need to have a confirmation letter from the IRS that's saying that they agree to tax you as an S corporation. Because some people like submit a document, but it's lost somewhere with the IRS, and they never actually send you a letter confirm. Then when you follow up with them, they say they lost it and they don't have evidence that you actually mailed the letter out. And that is why also it's very like administrative thing that you actually need to mail it by certified mail and have a copy of that you actually mail it out. So if track the record, so if they fail to like take it and record it, that is on their fault. It's not on your fault. But if you don't track these things, let's say that you actually didn't like mail it out at all.
Right.
And then they will delay for 1 year, because S corporation is just only have a 2 deadline. You can become an S corporation if your existing LLC file the paper to Form 2553 by March 15 every single year to be taxed an S corporation for that year. If you submit the paper after that, it will roll over to next year to be effective next year.
So you would have to wait.
You have to wait for a year.
That's ridiculous.
That's number one. Number two is if you a new business, new LLCs, you can submit it within like I believe it's 75 business day. 75 day after your LLC register to become an S corporation. If you submit after that, it roll over to the next year.
Yeah. I feel like we've heard of cases of people who thought they were already switched to an S corporation for a while, but their business has not been.
Yeah, it
recognized as.
Yeah, and when it's like call, I have to go with the IS to calling and to like confirm and submit document to show that we actually they actually said those things, and this is just create more like complicated, like unnecessary complicated thing.
Right.
But after you get that confirmation and an S corporation, you can set up the payroll, and it's just a matter, okay, which payroll provider company you want to use. Is Gusto or is ADP? What is the payroll provider? And then after that, register withholding, and depends on the state. Some of the states like New York or like Massachusetts or California, it actually require a lot of like tax ID with the state. But like basically you always need to have like withholding ID with the state, SUI which is state unemployment compensation ID, so that you need to pay for unemployment to your employee, which is now you become an employee of your own company, and you also need to register that. It depends on the state. Like state of New York, it will need to have like family care or parent family care ID and disability insurance ID, like a ton of ID. This depends on the state. But once you become an S corporation, select a payroll provider company, and your accountant and your professional should be able to help you to navigate with the state regulation, and it depends a lot in the state situation. So
Yeah. Okay. Let's move on to the next problem that they talked about. So it could save them money, but they have to take on some extra responsibilities. They've also having trouble keeping personal and business expenses separate.
Yeah.
They've mentioned using their personal account to make some business purchases.
yeah.
Do you just want to go over how like this is generally like bad practice and what they should be doing just to?
Yeah, so basically, like always in business, like when you take care of tax and bookkeeping, you always need to separate your personal expense out of your business expense. That's the general, like the best practice. Like you should have like your personal credit card and a personal bank account, that those personal things need to go into personal. But if in case that you accidentally use it, the business, you just need to like code it into the bookkeeping, code it as the distribution or like a owner drawer or the partner drawer in that case. But in general practice, don't use your personal expense on your business card and account. That's the best thing that you can do, because it's just cut clear everything, and it also like not pierce the protection of the multiple of the LLC. So LLC, one of the most important role it does is protect your personal liability.
Right.
So if you use it for personal, it pierces that protection of the LLC to your personal liability. So should not do that very often at all.
Yeah,
It's really the purpose of the LLC.
Yeah, that would defeat the purpose of it.
Yeah.
Okay, yeah. I mean, it sounds like a fairly simple fix, but it's just like being consistent and like continuously like being disciplined with it.
Yeah, it's just the matter of the habit.
Yeah.
Sometimes you just like, okay, it's just convenient. I just use one thing for everything. But your convenience is, I mean, in tax and regulation and legal, it's just create the consequences and the mess go with it. So just like make sure that you build a habit to like separate everything out.
Yeah. It's convenient right now, but later
it's not.
it's going to cost you.
Yeah. So
Yeah. Okay. So, I mean, yeah, it's an easy fix. And then another thing they mentioned was compliance. They said they missed a few state filing deadlines and are worried an S Corp might mean even more paperwork. So is that something they should be worried about? Like,
so one other thing is multiple member LLC will file the tax return called Form 1065 with the federal. And after that, like when you file federal, you always file with the state in terms of like income tax, business income tax. When you select to become an S corporation, you will file the form called 1120S. And it has the same deadline like partnership return or multiple member LLC return is the same deadline is March 15, and then the state is just follow, depending on the state. Most of the state, it had the same deadline like federal. So once you comply with federal, you comply with everything with the state.
Yeah.
But the other thing is whether you want to, on the federal, like both partnership, like multiple member LLC, S Corporation doesn't pay federal income tax. You just need to file the information return.
Okay.
And everything is it go to your K1 and you file and pay tax on your personal return. I think the thing that they say that non-compliance income of the state, maybe whether they file the federal on time.
Yeah.
Because if you're on time on the federal, you will be on time on the state.
Right.
Yeah. The state not having the deadline before the federal. Most of the time, never. Some state, they will have a 1 month after that deadline after the federal deadline. So I think once you comply with the federal, you comply with the state.
Yeah. So as long as just like keep up with the federal.
Yeah.
Just that simple. Okay. So if they're going to switch, they need to be ready for that extra responsibility. I feel like they're complaining. One of their bigger complaints is that just like the general workload of switching and then dealing with all the paperworks. And I feel like they should just consider like either hiring a new person or like just getting more help when it comes to like this.
Yeah, I think like they need some kind of like professional like CPA, someone actually have a experience to do this thing. I think in my experience, most of the time, the first year of switchings become an S corporation, many of our clients are actually very confused.
Right.
In the way that, okay, so now suddenly how much will be my salary and how much is my draw? Before, everything is draw.
Yeah.
Because you're not an employee of your own company, so everything will draw. And now I need to like consider what is actually my W-2 and how much is my draw. And then like their retirement contribution also like become like complicated on top of it.
Yeah.
Because you need to plan whether like your retirement contribution is like enough so it's show up on your W-2 before. If you like single member LLC or even multiple partnership, the contribution for retirement is just a SEP IRA and it's not show up on the W-2 anywhere because they don't have a W-2. But now their retirement contribution is actually show up on the W-2. And that is why it needs to have some kind of like strategy and formulation to know like, okay, what is my contribution? What is my distribution? What is my salary?
Yeah.
And this like, I think in many ways is very confusing in the first year.
Right.
Yeah.
Yeah. I think conceptually when you start an S Corp and like conceptually that the fact that you have to pay yourself a salary, like in your head, it sounds like simple.
Yeah.
But then you have to kind of think about like the details.
Yeah. How much to pay yourself. That is why the reasonable salary is also very important too. Because that is one of the things that make it or not make it in S corporation compliance, because the IRS will not like give you the advantage of like tax an S corporation and pay yourself minimum like $10,000 per year, and then you contribute all of it to your like 401k.
Yeah.
Then it doesn't make any sense, and it's not compliant with regulation in terms of S corporation. So that's part of like calculate what is your reasonable salary. Also needs kind of like professional people that will know, okay, based on the zip code of where you live, the type of work that you do, like what type of work that you work in your business, then it's create a reasonable salary.
Right.
Because pay yourself like $10,000 or $15,000 a year, it doesn't make sense for many industry at all, unless your business in like special industry that very common to get paid like $10,000 or $15,000 a year.
Right.
Yeah, but it's raised a lot of red flags for the IRS.
Yeah. So I feel like that's where the professional will come in and like help consult you through that process.
Yes.
Okay. And then lastly, they were having trouble saving up enough to pay for their quarterly tax payment.
Yeah.
Every quarter, they end up scrambling to come up with money. All right. So do you have any tips for them to, like any good practice for them to move forward?
Yeah. So basically, again, because now you become an S corporation, they're withholding on your W-2. So there are some tax that you already like start deposits to the federal and to the agency, which is so much better than before. All draw, there's no withholding.
Right.
Now you have a W-2, so there's withholding is number one. But then again, you pay tax, everything is flow into your personal because you don't pay tax on the S corporation or partnership on federal or state level, depend on the state. Some state, I think most of state nowadays allowed the S corporation to pay tax on the state level, and you can tax the deduction for that on the federal return.
Oh, okay.
So they allow it to do it too. But for many reasons, some people, they don't want to pay anywhere. They just want to pay on their personal return level through the K1.
Right.
And so that is in terms of tax planning, you need to plan in the saving in your personal, not in the business at all. So like maybe like 25% of everything that the business, like for example, in this case, if you have 100,000 net profit, we report in your K1, save around like 25% to pay the estimated. But the best situation is have someone actually make the calculation for you.
Yeah.
So that you don't do everything like just by like an estimating, and it's maybe like it's short coming, especially at the end of the year, like you're just scrambling like to find the money to actually pay for that.
Yeah.
That's just the best practice, I think.
Yeah. I think what everyone underestimate about the quarterly tax payment is that it kind of requires like planning as well.
Yeah, it is.
And that's just another thing that you kind of have to add to your calendar every day that you have to plan for quarterly tax payment. So like just having an extra helping hand to like help you plan for this payment could be really helpful.
Yeah, and it actually very important. I think I have a lot of small business owner come to us and say, "Oh, my current accountant never have a tax planning, and by like December 31st, and they say that, oh, now I need to contribute for retirement $20,000, and then you need to like send the estimated tax payment like $20,000 more. They say, oh, we small business, we don't actually have a cash flow that have that much of money sitting around to like actually pay estimated tax or contribute for retirement. And I think that is one of the big problem that many accountants on the market don't do that for their client. They actually have them to plan ahead. But it also, if you are business owners, you are a entrepreneurs, you need to think about planning ahead of the time, and that has helped you a lot in terms of anxiety over the cash flow. At last minute, like where you find like $40,000 just to handle the obligation of it. It needs a lot of planning with it too. Like.
Yeah, definitely a very overlooked part of when it comes to like tax.
Yeah.
But I think that's all the complaints that client had for us. I'm still gonna go over some quick questions for you just so that you can answer like when it comes to like this specific topic.
Yeah.
Okay. So someone asked, how can I reduce my self-employment taxes legally?
Become an S corporation is one of the way that you basically like just pay yourself a reasonable salary, and you only pay the self-employment tax based on that is legally to do it.
That's a quick way.
Yeah.
And then another person asked, do I need an operating agreement if it's just me and my friend?
One of the things I learned in this career, like 15, 16 years in this career and in this industry, what I learned is this. You will understand people very well when it comes to money, when there's a lot of money to fight for. So if you start a business and we like friends and everything nice, smoothly, and the company doesn't make a lot of money, so everything is easy. But in the next 10 years, imagine that like one day your business blow up, become like make a profit $20 million. You will understand your partners at that time more than at this time when you just start. I don't mean that like everyone will be like that, but I see a lot of the case and situation, a lot of the cases and situation that money will show who they are a lot, and especially come with a lot of money. So basically, if you like your friend and you want to maintain that friendship for a long time, should have an operation agreement that how thing is make the decision, how profit and loss is separate, and how all the track records will be like in the right place. If you come to the business alone, only you, easy. You're not gonna be like argue with yourself. But if you come with your friend and you actually want to have a long-term relationship, you should have everything in orders. That's just my experience.
Yeah. It definitely can get messy very quickly.
Yeah. Yeah.
And then in this operating agreement, are you expressing like how much everyone is taking home every month, or are you talking about like their scope of work as well? Like,
Yeah, that's your operating agreement. So you can come down like who manage what and how to make the decision, how like everything is split out, and how it's like, okay, who gets like guarantee payment or whether it's not guarantee payment, and how who contribute what to. So that is your agreement between how to operate the business, and you can get to the detail how much that you can.
Okay.
And you can have lawyers or like a professional actually sitting down and have you to draft that operating agreement. And I can say that it's one of the most important thing to do.
Okay. Next question. Can I write off my home office if it's just my kitchen table?
So, home office. There's a couple rules to do with home office. Number one, it needs to be where you perform like majority of your business, conduct your business. Like for example, if I need to meet the clients or to Zoom call or whatever, will be that is number one. Number two, it needs to be separate and dedicated for the business. So that is why a kitchen table is not a dedicated place for the business, and by definition is not meet the requirement from the IS. Sorry, but it's not going to be like your kitchen table at all.
Right.
I remember there's a ridiculous case, something that they argue about whether the restroom that due for the business, that whether like in regular time they use that restroom or not. I said that is ridiculous, but it can be like very detailed. So if they don't look into your case, they don't look at. But if they look, it can be like a little bit ridiculous.
Right.
So we need to be like compliance before it's become like if they. We don't know. We don't know who get that unlucky situation, but just follow their standard.
Yeah.
Yeah.
And just be a little bit reasonable. About
Yeah.
Yeah. Okay. And then do I report side hustle income if I only made a couple $100?
So in the general, you report every income that you make, regardless it's like $1, $2. That is the requirement as a taxpayer. So you still need to report it.
Yeah.
And I can say like a couple $100, you're not gonna really pay tax on that, because at the end of the day, you still pay tax on the net profit. From anything that you earn. So I don't think that you will need to pay tax, but like for the compliance, report it. Don't try to hide it. At all, it doesn't make any like sense to hide it.
Yeah. It's just good practice.
Yeah.
But yeah, I think that's all the questions that our audience had for us for this episode. If you guys have any other questions, definitely leave it in the comments below or let us know. We're going to continue to answer any questions that you guys have. And if you have like your own case, like we would love to explore your case as well.
Remember to like subscribe or give us the review or ratings and give us the feedback, because that is our efforts to answer more your question and become more practical and helpful. So thank you so much for your time today, and we're looking forward to the next episode. Bye-bye.